These are 7 top stocks in pre-market with big percentage move today. Our review on JNVR. Janover Inc, the AI-driven platform that connects commercial real estate borrowers with lenders, just pulled off a major move that's turning heads. They raised about $42 million through convertible notes and warrants, with backing from big crypto players like Pantera Capital, Kraken, and Arrington Capital. The cash is going toward building out a digital asset treasury strategy, starting with investments in Solana. On top of that, they're rebranding to DeFi Development Corporation, signaling a full-on pivot into the world of decentralized finance and Web3. It's a dramatic shift from their core fintech business, but investors are clearly intrigued. The stock exploded over 250% in pre-market trading. Yes, it introduces new risks like volatility and regulatory uncertainty, but it also opens the door to a much bigger growth narrative. For investors looking at future-facing plays, this one's suddenly back on the radar. Our review on BJDX. Bluejay Diagnostics Incorporated is a small but ambitious medical diagnostics company that's been flying under the radar until now. They're focused on improving how quickly and accurately serious conditions like sepsis are diagnosed, especially in critical care situations. Their flagship product is the Symphony system, a rapid, near-patient testing device that can give results in about 20 minutes. The test zeroes in on IL-6, a biomarker tied to sepsis, which is a huge deal in emergency care where doctors are often racing the clock to figure out how sick someone really is and what to do next. Now this morning, Bluejay's stock absolutely exploded. We're talking a 135% surge in pre-market trading, starting with a 35% spike right out of the gate, and then ripping another 75% higher. That kind of two-wave breakout is eye-catching, especially for a tiny company like this, and it's happening without any major news hitting the wires. No fresh press release, no official FDA green light, nothing concrete. So what's going on? Well, this feels like one of those moments where something's bubbling beneath the surface. Maybe there's word leaking out about upcoming clinical results, a regulatory update, or even a partnership or acquisition buzz. Or it could simply be momentum traders jumping in hard on a low-float name and running it up. With speculative stocks like this, even the hint of progress can spark a frenzy. Whatever the catalyst is, it's clear Bluejay is now firmly on the radar. But with this kind of move, volatility is the name of the game. It might offer opportunity, but it also comes with a fair amount of risk, especially if the hype isn't backed by something real. Definitely one to watch closely in the days ahead. Our review on CHSN. Chanson International Holding is a bakery and cafe operator that's been carving out a presence in both China and the US. In China, they're behind the George Chanson and Chanson brand stores, offering everything from baked goods to drinks and seasonal products through third-party producers. Over in the States, they run Patisserie Chanson, which leans into a trendier all-day cafe vibe. Think baked goods, brunch, coffee, bar food, the works. It's a boutique-style model that blends traditional bakery with lifestyle branding, aiming to catch a slice of the premium food and beverage market in both regions. Now, looking at their latest financial update for FY24, Chanson showed some solid progress. They bumped earnings up to 5 cents a share, compared to 3 cents last year, and revenue rose to $18.2 million from $17.3 million. Not earth-shattering, but it shows they're moving in the right direction with steady growth on both the top and bottom lines. That modest beat triggered a pretty wild reaction. Shares spiked 112% in pre-market trading. A big chunk of that came right at the open, with a 50% breakout move before the market even officially got going. That kind of jump screams low-float momentum play, where even small pieces of positive news can trigger big moves when traders pile in. But, as often happens with these small-cap names, the early hype started to fade closer to the regular session. So where does this leave us? Chanson's numbers were better, and they're quietly improving their business. But the market reaction was more about the setup than the fundamentals. Small float, surprise beat, no real analyst coverage. If you're an investor, it's one of those interesting but early stories. It's not a slam-dunk long-term play yet, but if they can keep executing and growing brand awareness, especially in the US, it could evolve into something more. For now, though, this move felt more like a short-term trade than a signal of long-term breakout. Our review on SUNE. SUNation Energy Incorporated is a player in the solar energy game, providing solar and backup power solutions for homes, businesses, and municipalities. Their focus is on growing local solar and energy storage operations, with a range of brands like SUNation, Hawaii Energy Connection, and eGear in their portfolio. They offer end-to-end services, from solar system installs to maintenance and even roofing in Long Island, so they're covering a lot of ground in the energy sector. However, things recently took an interesting turn with SUNation stock. They just closed the second tranche of a registered direct offering, raising $5 million by selling over 4.3 million shares at $1.15 each, plus warrants attached. On the surface, this looks like a positive step forward in terms of securing capital. But as we've seen with these types of offerings, there's often a downside in the form of dilution when more shares flood the market. The stock reacted strongly in pre-market trading, jumping up by 108% at one point, with a 35% breakout right at the open, followed by another 85% move. While those numbers might seem exciting, it's important to consider the bigger picture here. Yes, there's a lot of momentum right now, but these massive gains can be volatile and often fade as the day goes on. In fact, by market open, the stock had already started to cool down, and that kind of price action can leave investors wary of whether this breakout will hold in the long term. The key concern here is that, while the company's moving forward with these capital raises and trying to expand its operations, there's a lot of uncertainty around how well it can execute on those plans. The clean energy space is competitive, and while SUNation has a solid offering, the market's reaction to their latest funding event signals a bit of caution. The sudden stock spike might be more of a short-term trade rather than a signal of sustained growth. So, while it's clear SUNation is trying to position itself for future growth, I think it's wise to stay cautious here. The volatility seen in pre-market could easily translate into a pullback once the dust settles, especially with the added dilution from this offering. Investors might want to wait for more consistent performance before jumping in headfirst. Our review on MESA. Mesa Air Group Incorporated, the regional carrier behind Mesa Airlines, operates over 80 cities across the US, Canada, Mexico, and Cuba, with a fleet that includes 80 regional jets and Boeing 737s for cargo. The company's flights are branded as United Express and American Eagle, providing essential regional air service for major airlines. Today's big news is Mesa's merger with Republic Airways Holdings in an all-stock deal, creating a major regional airline. The combined company will be called Republic Airways Holdings and listed on NASDAQ under the ticker RDT. The merger is set to close in late 2025, and the new entity will have 310 Embraer jets and a projected $1.9 billion in revenue. Mesa shareholders will own 6% to 12% of the new company, depending on pre-closing benchmarks. As for the stock, Mesa shares are soaring, up 59% in pre-market trading, with a 35% breakout during the pre-market session. While the excitement is clear, there's still some caution. The merger could lead to improved scale, better financial stability, and more route options, but it's not final yet, and investors should be aware of any regulatory hurdles or market shifts. The jump in price today is promising, but it's important to watch how this plays out as the deal progresses. It's an exciting time, but there's still some uncertainty ahead. Our review on NWTG. Newton Golf Company Incorporated, formerly known as Saks Parente Golf, has been making waves in the golf industry with its innovative, tech-driven products like their Newton Fast Motion shafts and premium gravity putters. The company has carved out a niche in offering high-performance golf equipment designed to boost swing speed and maintain precision, using advanced materials like Toray carbon fibers. They sell through a mix of channels, from resellers to their website and major retail stores like Club Champion, making their reach global with distribution in the US, Japan, and South Korea. Today, Newton Golf stock is seeing a significant surge, up 27% in pre-market trading, with a standout 30% breakout during the pre-market session. This kind of price movement points to investor excitement around the company's products or maybe some buzz around a recent release or business update. It's important to remember that while the spike is promising, it could be driven by speculation or short-term momentum. The real test will be how the company can convert this attention into long-term growth and profitability. Investors should keep an eye on any news or announcements to see if this rally can be sustained or if it's just another flash in the pan. But for now, it's definitely a moment of optimism for Newton Golf. Our review on ICCT. iCoreConnect Inc. is a cloud-based tech company offering a suite of SaaS solutions aimed at improving healthcare workflows and practice profitability. Their platform is packed with over 16 different applications targeting everything from e-prescribing with iCoreRx to more complex services for medical, dental, and IT sectors. They've secured over 100 agreements with healthcare associations across the U.S., which shows they have a decent footprint in the market, particularly in the healthcare business tech space. Now, on to the stock action. iCoreConnect is up 22% in pre-market trading. That's a solid jump, but there's a bit of a cautious tone to it. While the growth in stock price is notable, it's important to keep in mind that this could be a short-term spike fueled by news or speculation, rather than any fundamental shift in the company's outlook. A 22% increase can be exciting, but investors should tread carefully. The stock might be reacting to some positive momentum, but it's worth keeping an eye on whether this growth holds once the market opens or if it's just a temporary boost. So, for now, it's a bit of a mixed bag, good for short-term optimism, but long-term stability is still something to watch. Please subscribe, give the video a like, and watch more from our playlist. Thanks.